Good evening and welcome to You and the Law. I'm Mike Monta, your producer and host for tonight's program, and we're getting into tax season. This is coming to you on March 2nd, 2015, and we're going to be talking about income tax and other aspects of the tax code and how it affects you, the viewer and consumers and homeowners and whatever. And we do have a special guest, an expert in the field of taxes in the Miami Valley area, Mr. Chris Cowan, sometimes known as Christopher F. Cowan, Esquire, and he will answer your questions if you call in. So before we get to our discussion, let me remind you that You and the Law is a monthly presentation produced here at the studios of the Dayton Access Television. DATV is on Channel 5. I think out in the suburbs it might be on Channel 6, but it's the public access channel of Time Warner Cable Network here in Dayton, Ohio. The program's also cablecast on tape delay, probably digital delay now, on public access channels of Time Warner through the auspices of the Miami Valley Cable Council. The executive producer for today's program is former domestic relations judge and author Mike Brigner. We also are streaming live to you at DATV.org. And if I hadn't said so before, this is an audience participation program. We're live and in color. The number is 223-5311, and it should show periodically on your television set. So if you have any questions about taxes, Chris Cowan can answer those. Please call in, and we will take care of that. We also have to let you know, and we are honored to be sponsored by the Dayton Bar Association let's see, they were formed in 1883, so do the math on that. How many years is that, Chris? 100 and some odd. Longer than we've been practicing.
130.
Yeah, so I'm going to turn to Chris now and let him reintroduce his own self and tell you, the viewing audience, a little bit about his background and familiarity with today's topic. Chris, an honor to have you again.
Mike, it's my pleasure. It's always fun to be on your show. As you know, I'm a retooled CPA and got out of law school in '81. I've been in Dayton since '81. And I handle some estate tax, income tax, other sort of tax situations that arise, often in business setting situations, and I prepare some returns also.
Okay, great. Before the show, we were talking about the tax code and some of its volatility. You indicated to me that there's been a lot of changes going on, some to do with the Affordable Care Act, sometimes known as Obamacare. Would you care to tell us a little bit about some of the changes that would affect our viewers the most?
Okay, Mike, I would say a couple major ones could be the Obamacare tax, and we can give some examples about that. We have same-sex marriages now have been approved by some of the states, and we have a interplay on how Ohio handles that. We have endless, Mike, tax fraud, phishing, theft.
That's fishing with a PH.
That's right.
Okay.
And we have endless tax scams. I can talk with you about some of those. We have constant federal myths that are being perpetuated and generated a lot on the internet. And those would be a couple highlights of things that would be one or two, or some of those would be something that a normal person who's a taxpayer in Ohio might come across.
Well, let's start out with the Affordable Care Act. Obamacare, I guess, and there was a Supreme Court hearing on portions of it today. Of course, the arguments won't be decided probably for several months, but It's been in effect for a couple of years, and seems like some people like it, like the millions who sign up for it that didn't have insurance before, and some don't like it because they feel it's an unconstitutional infringement on people's rights to either get insurance or not get insurance. So why don't you, if you can, give us a little background on it and how it affects people's taxes.
The philosophical stuff and the political stuff, Mike, I really can't speak too much on, but I can tell you this: the insurance piece affects every taxpayer in America. And luckily, for most people, it's going to be a total push. It's going to be business as usual, because if you and your wife, your dependents, me, my wife, if you have insurance, and if you've had insurance during calendar year 14, it's as simple, Mike, as check a box. Say I file jointly, I have insurance all of calendar 14, my wife and I are insured, I check the box, it's as simple as that. If I don't have insurance, or my wife doesn't have insurance, or my dependents don't have insurance, and I'm filing a tax return for those folks, then there are some penalties that can be calculated based on your income, based on your filing status, based on how many dependents you have, and the cost that you're paying for those insurance products. For example, I mean, if you would run a...
Well, just so we're clear, if you don't have insurance and you are filing a tax return, which you probably ought to if you make any income at all, subject to the thresholds, you have to pay by law a penalty if you don't have the insurance. Is that a correct summary?
There are some thresholds for lower income levels. There are some exemptions. There's some hardship pieces. There are some, oops, I forgot to have insurance for a couple of months, little de minimis exemptions. But the general rule is everybody in the U.S. who's a taxpayer is required to have insurance. And if they don't, then there is a clawback, if you will, a penalty for not being insured.
Okay, but as they stated, I think, in the Supreme Court case, it's not considered a tax, even though you're paying some money, or supposed to pay some money for it. Is that also right?
Well, I really can't speak to the Supreme Court interpretation.
Okay.
But I will tell you this: if you don't have insurance, and if you're filing a tax return, and if you're not inside these little cubby holes of a hardship or an exemption or a de minimis.
And this is like health insurance.
This is health insurance we're talking about.
Okay.
I mean, for an example, just roughly, if you were filing joint and you had no insurance and your AGI was approximately $60,000.
AGI for our viewers
it would be adjusted gross income.
Right. Okay.
You would pay roughly about a $400 penalty, surcharge, whatever you want to call it. There would be an addition to your tax bill of that. If you were 1,000, say you were filing jointly, you and your wife were filing jointly, no dependents, no insurance for the whole year, crudely, you would have around $800 or $900 of penalty that would be charged on your tax return, and you can just about double that at $200,000. It would be around $1,800 or $1,900 of additional tax you'd have to pay, just like Social Security tax, income tax, other sort of taxes that would be assessed on a personal income tax return.
Now, if you don't pay, let's say you fill your taxes, your tax forms, your 1040 and whatever out, and send it in, but you don't put that penalty in even though you're supposed to. What is likely to happen?
Likely you will get an assessment, because you're either going to check the box that says you're insured all year or you're not. Now, I suppose...
So it's just like underpaying your taxes.
Yeah, I mean, I'm sure with all the millions of people that we have out there, someone is going to check the box that says they were, say we have the simplest case, a husband and wife, they have no insurance, they check the box. Somewhere along the line, that's going to be discovered, and they'll have a surcharge made on their tax return, just like if they'd have left off a dividend or interest or some other income.
Okay.
that was taxable.
So the people somewhere with the IRS that are checking each return, they're going to go right to that box first. And
I think there's going to be some looking at that box.
And if it's checked, they just move on.
I think that's probably going to be the first step.
But if it isn't checked, suppose you don't have insurance and you check it though.
Well, I think a lot of people.
How are they going to know that?
Well, think about the people that are on Medicare.
Okay.
No problem there. Think about
Right.
the people in the military. Think about people who work for large corporations, who work for municipalities. And as you sort of winnow this down, there are lots and lots of people who are going to be sort of automatic insured people.
Mm-hmm.
And so that gets us more to the self-employed, the underemployed, people who aren't working in those sort of sectors. I think, obviously I've never talked to an IRS agent about the specific issue, but
Right.
obviously you can see that somebody who's a self-employed attorney might be more suspect not to have health insurance than somebody who is working for the Navy.
So they might double check it.
I'm thinking somebody like me might have a double check.
Okay.
Yeah.
So if you haven't checked the box, you didn't send in the extra whatever,
Paperwork to calculate the penalty.
the penalty, they will send it back saying you underpaid and your interest starts running as of the 15th of April then?
Well, that exact fact pattern hasn't happened to me yet,
Mm-hmm.
but my guess is the IRS will just calculate the penalty and send you a notice
And it keeps running until you
until you pay it.
until you pay it. And I guess it's less beneficial because you're still not insured.
Well, the whole insurance piece is a whole other deal. If somebody, I mean, obviously it's good to have insurance. Obviously the government wants everybody to have insurance, and this is just more of a carrot and the stick that if you don't have insurance, then there's going to be these repercussions are going to happen. There's going to be some sort of penalty to you for not having insurance.
All right. I'm going to take a very quick break here to let our viewers know you're watching You and the Law. We are talking about taxes tonight, income tax and otherwise, anything else. And we are going to talk about some other things in a minute. We have Mr. Chris Cowan, Esquire, which means he's an attorney. He's also a CPA of note in the area, and he can answer any question that you would call in with 223-5311. Let me briefly tell you we are sponsored by the Dayton Bar Association, whose director is Bill Wheeler. And Bill's doing a fine job. For how many years has Bill been with us? A dozen, 2 dozen? A long time.
Something like that, but he's doing an excellent job.
He is. He's doing an excellent job. And let me tell you a few things. We don't have commercials on this program, but we do talk about our sponsors because we're very appreciative of what they do for us. We have a notary public service. If you wanted to become a notary, there's application testing for that, and I think a lot of people do need to become a notary either for their companies or for themselves. Lawyer referral service if you don't have an attorney and you've got a problem, legal problem, they can help you out with that, and I'll give you the number. If you take it down or have a good memory, that's good. Otherwise, call the Bar Association. Give you both numbers. The lawyer referral service, 222-6102. That was pretty slow, wasn't it? And the general number is 222-7902. We also have a speakers bureau. If your club or organization would like someone to speak on a specific topic, the Bar Association can provide one of its volunteer members to speak at either a short length or long length, depending on what you want. You don't even necessarily have to feed them, but sometimes the service clubs do have lunch or dinner, so they'll be happy to do that. And maybe one of the most important programs as of late is the Our Wills for Heroes program, where member attorneys volunteer to create wills and estate documents at no charge for emergency first responders, fire, police, and EMT. So the Bar Association number, as I said, is 222-7902. If you need any of those services, give them a call. As I said, we're happy to have them sponsor us. Any holdover on things you want to talk about on that ACA, or did we pretty much talk about it? Because if not, we'll move on to something like how does the tax in federally in Ohio deal with a new hot topic? It's hot because everybody's talking about it a lot, is the same-sex marriages, and full faith and credit to that, and how those people are affected filing taxes.
Mike, that's an interesting area. The federal law, and not all the jurisdictions, but some of these states now have same-sex marriages. It could be California.
We don't in Ohio.
Ohio does not have
yet
same-sex marriages yet. In fact, we have a constitutional provision that prohibits that. Where the case law is currently in Ohio, I really can't speak to that. My understanding, there are some cases moving forward. I'm not sure whether they're in the appellate level still, or the Supreme Court, or where they are. But for filing on the income tax piece, if someone has, say you and I were legally married, Mike, in California or some state like New York, okay, we can file, you and I could file same-sex marriage for the IRS on a joint 1040, no problems. And
what would we have to give proof there or something?
No, there's
or
no
just
proof.
Say it's.
We would just say we're filing jointly,
okay.
Just like I file jointly with my wife and you file jointly. There's no requirement that I produce a marriage certificate. Now, if we would get audited, we would have to prove it if that would become an issue, just like anybody else would. But say we had a same-sex marriage from non-Ohio, because they're not permitted in Ohio, we could file a joint 1040, no problem. Now, what do we do with the Ohio return? Because Ohio currently does not adhere to the same-sex provisions that the IRS does. So we would have to file separately. We'd have to file a standalone return. We could file a joint for IRS, but for Ohio, you would have to file a separate income tax return with your deductions, your income, your withholding payments, whatnot, and I would have to do the same. We would not be able to file a joint Ohio income tax return.
Okay. Floor director tells us we have a caller waiting, so we'll take that call. Good evening. You're on You and the Law. Is our caller there?
Yes, hello.
Hi. What's your question?
Hi, my question is a little bit random, but I was wondering if I have a child that is below the typical work age, she's a young, school age child, and she does modeling work, do I file the tax return for her, or do I have to claim that as my income, being her parent? How does that work?
Let me ask you, your call was a little bit broken up, and I think what I heard was you have a child who is a minor who does work and gets some income out of that, and you're wondering whether that should be filed on your taxes or whether there's something separate to do. Did I get that right?
Yes.
Okay.
Okay.
Chris?
Are we? Generally, there's absolutely no problem with taking a child as a dependent, as long as that child lived in the house half the year and you provided at least half the support, and there's a proper relationship between the parent and the child. It could be a stepchild, a grandchild, or whatnot. So there should be no problem having the child as a dependent on the parent's return, and then the child would file its own income tax return, but would not claim a dependency. So you're only going to get one dependency for that child, whether it's
Okay.
on the child's return or on the parents. Now, if this kid won the lottery or was a movie star and was making more than half the support, well, then the kid would file his or her income tax return, and the parent wouldn't have the deduction.
Okay, so would there still be like a threshold for filing for the child? Depending?
Well, a lot of times the child might be under the threshold, but there might be some withholding.
Okay.
And you'd never get the withholding. Say there was a pool job, or
Okay.
worked after school, or had some sort of employment that
A little
was,
modeling job or something.
well, something that had some withholding. Maybe worked in the streets
Right.
department or something like that for the city, and had some money coming in. Often there's withholding on that.
Right.
So they may be under the actual withholding per amount to file the tax return, but you'd still want to file so you can get that refund.
Otherwise, you'd lose that.
You lose that.
Okay.
So in
And-
doubt, the answer would be always to file.
Okay, and just anticipating the caller's follow-up, would the parent then file for the child, or would they have to file or sign along with the child? Or?
The parent can sign. There's no problem with signing that, or the child can also sign.
Okay. Does that answer your question? Well, hopefully it does.
Well, one more follow-up on the
Okay.
filing, Mike. The IRS doesn't know what other income somebody has.
Right.
And so say the child has a modest amount, just $800 or $900, and has $50 withheld. You're never going to get the $50 if you don't file. Number
Right.
two, the IRS doesn't know that there's other income or not.
Right.
And so to keep the paperwork down, it's almost always easier to file as long as there's a W-2 or some sort of connection to that child. The gold standard would be file the return.
Well, let me ask you this, and this would be for, say, like the teenage boy or girl who mows lawns in the summer or paints garages or something like that, and maybe makes $2,500 or whatever, if they're hardworking.
Sure.
And it's all in cash.
Yeah.
Is that the type of thing which you would encourage people to file, or, as you said, the IRS is not getting anything from the people who pay this cash?
Well, we've gone into another area, Mike, because I was sort of focusing on children with W-2s,
Right.
where the employer's paying
Yes, I jumped off of
city
that.
tax, state tax, federal tax,
Mm-hmm.
Medicare tax, and now you've flipped this into
Right.
a self-employed situation. So
Right.
now all bets are off because the city of Dayton's going to want a city income tax.
Mm-hmm.
The state's going to want a state tax. No tax was withheld. We have Social Security tax. It's above $400 in Social Security earnings. Then there's going to be possibly some federal income tax. So all bets are off. As soon as the child has moved from a W-2 where the employer is, if you will, taking those deductions out and making those payments back to the city, back to the state, back to the IRS. And if the kid's working, has a paper route, doing like you're talking about,
Right.
yard work, now he's self-employed.
Right.
And the kid should file. There may not be any federal tax, but the Social Security tax is going to be there, and there's going to be most likely some state and guaranteed city, because the cities don't have the deductions like the state and the federal government does.
Now, so you're basically, even if it's just on cash, you're advising the people probably to file something. And one of the reasons is that you kind of build up your Social Security nest egg in there a little bit, do you think?
True, but it's also legally required to file. It doesn't matter where somebody pays somebody in check or cash or
Right.
bitcoins,
Right.
right? Or they give you property. They give you a car. You paint somebody's house, and next thing you know, they say, here, take a car, not a couple $1,000s.
Right.
It's still equivalency of cash, and that piece would be taxed.
Yes.
So the answer is yeah. It doesn't matter really whether it's a cash payment, whether it's a check payment, or a credit card or any other compensation.
So in the movie Goodfellas, where it looked like they were millionaires but didn't have jobs, that would be that sort of thing.
Well, I didn't see that movie.
Well, you should.
I'm a little handicapped.
It's a very good movie.
I don't know what to say, but if somebody has,
They should have been reporting that.
I'm going to say then they probably should be reporting. That's the Al Capone, remember?
Right.
Al Capone didn't go to jail for
exactly.
any sort of crime activities. He went to jail because he didn't get his taxes right.
Right. We also talked before we came on the air about some of the changes in Ohio. I see that the governor is now saying, or maybe that's the governor in Wisconsin, I'm not sure, but a lot of the governors, especially the Republican governors, again, don't say anything political if you don't want to, but they're feeling as though they can reduce the income tax, or at least a plan to, and increase the sales tax. Is that something that is going to be helpful, or are we going to be in another shortfall by reducing all our taxes?
We're talking about Ohio, right?
We're talking about Ohio.
We're talking about Ohio.
I think that is the plan that I read about.
Well, I think Ohio is going to be, and I don't have the exact numbers, Mike, but I think Ohio is going to be an enormous beneficiary of severance tax off gas and oil. And Ohio's been reducing its income tax rates the last couple years.
Right.
And we also have the small business tax deduction. So I'm not aware of Ohio raising its sales tax, but I do know for 14 tax preparation, the rates are down. And if you are a business person, Ohio has phenomenal deductions for the self-employed, also for pass-through entities like S corporations and LLCs. You can take it, not for IRS, but for Ohio, we have the small business deduction, which can be up to approximately $180,000 of deduction off your tax return.
Now, what qualifies for a small business?
Basically, it's anything that's not capital gains, interest, dividends, other sort of earned income from a W-2 type source.
Okay.
Self-employed people would clearly qualify.
Okay, so you don't necessarily have to be incorporated, or
No.
you don't necessarily have to be a partnership.
No.
But would those qualify also?
Yes. LLC qualifies, pass-through, S corporation, and clearly self-employed people.
Okay. We'll take a very short break. I think we have a little less than a half an hour left in the program. You're watching You and the Law here on DATV Channel 5. We're talking about taxes, income tax, other sorts of taxes, with Mr. Chris Cowan, an attorney here in Dayton, Ohio. What's your address, Chris? I never.
12 West Monument, Dayton.
12 West Monument.
Main and Monument.
It's right down near where the Newcomb Tavern was, isn't it? Aren't you right around the corner?
Oh, the old Newcomb Tavern.
The old Newcomb
The
Tavern.
old historical tavern.
Right.
Yeah, exactly.
Yeah, so it's pretty easy to find. 223-5311, we have a caller on the line, so we'd like to take that call. Good evening, you are on You and the Law. Are you there, caller? Okay, I'm not making this out. Are we having technical difficulties? I'm wondering if someone could write that question down from back in the control room, maybe bring it out. I don't think we've done that in a while, but we'd certainly like to hear the caller's question. Remember on the old TV when that have technical difficulties, that have a guy with a little wrench, a cartoon of him?
Oh, yeah.
Make,
That's what we need.
right.
I could not hear that call, Mike.
No, that one we couldn't make out at all. We were briefly talking about some of the changes in Ohio, and one of the ones that is most beneficial in the recent years is the elimination of the inheritance tax. Tell us a little bit about how that works, whether it's retroactive or owing taxes or what.
Mike, it is totally phenomenal taxpayer relief. It basically applies to every resident in the state of Ohio. All you have to do is die, and you qualify for no inheritance tax in Ohio. Doesn't matter what size your estate.
$10 or $10 million?
Doesn't matter. Bill Gates may be moving back to Ohio because we have no Ohio death tax. It's basically, there's some exemptions, but I mean, the old floor was approximately $338,000 for a single person. So anybody, anybody who had more than $338,000 net assets under the old law was going to pay crudely 7% tax.
Right.
It was a snare, if you will, for single people that were all the time slipping into it. It's been totally repealed. It started 1/1/13. There is no cap. You can be a multi-billionaire, no problems, no death tax in Ohio. It is as good a windfall as that. Really, it was more than I ever expected, truthfully.
Yeah.
I thought the exemption would go up, the rates might go down. We got no tax and no cap on the amount of availability for the relief.
Okay.
That is phenomenal.
Let me cut you off just for a second. Our floor director tells us we do have a caller waiting. Let's see if we can get the call. Good evening. You're on You and the Law. We're just not getting it in here. I hear somebody talking somewhere. They're trying. They're trying to.
I don't know what to say, Mike. I cannot hear it.
I cannot hear it either. Okay, well, so the elimination of the inheritance tax also means that people don't have to qualify for marital deductions. They don't have to be married and one dies and one gets it all to not pay taxes.
All the more sophisticated planning of tax shelter trust, marital elections, if you will, all the sort of nuts and bolts of estate planning where we would try to split estates, defer taxation, set up certain kind of trusts that qualified as exempt under Ohio, it's all not necessary.
Yeah.
It's totally not necessary. It is a big taxpayer saving in tax plus compliance costs and
Right.
planning costs.
Right. Let me inquire of our floor director out there. Is the caller still on the line? Maybe we can get him to use a different telephone or something. Okay, they hung up. All right. Okay. Well, that's okay. At least they're calling. That's fine. Now, this is just in Ohio.
This is Ohio.
How does that affect, if at all, the federal tax? I remember when it was, what, 700,000 or something?
600 before
threshold.
that.
Yeah.
And so where we are currently is also phenomenal for Ohio taxpayers. The federal exemption has been ratcheted up. It was $5 million a couple years ago. It's been indexed for inflation. It's been made permanent by Congress. And it currently is $5,430,000 for each citizen residing in Ohio. So you have, if you will, $5 million. I have $5 million. Your wife, my wife, we all have $5 million. So that effectively has eliminated the need for most Ohio couples to have the privilege of paying a death tax.
Mm-hmm.
We also have portability. So it's possible that you could have, if say all your property in your name, both yours and your wife's property, your wife, if she would die before you, we could actually make an election
Mm-hmm.
to transport, let's say 5 to make it simple, on the math, her 5 could come over to you. So she wouldn't even need to have property in her name for you to have the benefit of her $5 million exclusion. It is really, it is startling, truthfully. If you would have said we would have had these kind of favorable tax policies in today's climate 15, 20 years ago, nobody would have believed this. But it has happened. We have this sort of legislative history. It has happened. It's currently the law. There's no sense that it's going to be repealed or altered. And so it's really double good times for Ohio taxpayers. We don't have any Ohio tax, and the federal exemptions have gone very, very high.
All right, we're going to try and get another caller calling in. Good evening, you're on You and the Law. What's your question? We're not getting you. I don't know if you can hear me, but it's like one of those things coming from the moon.
Mike, you need to give out your cell phone number.
I could give out my cell phone number. It's just, okay. All right. I'm sure that...
O for 4.
I'm sure that caller had a great question, and I would love to have heard it. So, what do we got, 20 minutes left? Something like that. Let's talk about some tax myths.
We can talk tax myths.
Tax myths. We wrote some of these down, or we used to write them down. We don't do that anymore. We Google them, or we just know them. Filing taxes is voluntary. True or false?
Well, technically it's voluntary, but the law says you have to file. So it's a little bit of a misspeak.
Right.
We don't have a system where you report into the IRS and you have sort of checkpoint Charlie and people don't come out to your home and assist you. But the filing is voluntary, and we all are sort of duty bound to do that. But it's voluntary in sort of nomenclature only.
Okay.
You're under the law. The law's been passed. It's been deemed constitutional. That's where we are.
Would you like to try to have another phone call here?
Sure.
Okay.
I'm totally happy to take a phone call. I'd love to take a phone call.
If a caller is there, we'd love to hear your question. You're on You and the Law. If I only had ESP. All right. Myth number 2. You can claim pets as dependents.
You know, that's really funny, Mike, because as you now know, everybody who's on the tax return has to have a Social Security number. But you're probably old enough to remember that always wasn't the case. Somewhere in the 90s, we changed so that children and other dependents, you needed to have their Social Security number on the tax return. If you don't have a social, no deduction. You know, something like 7 million people disappeared that year.
So Fluffy and Fido, unless they qualify for that SSN number.
But you have a Social Security number, no deduction.
So you can try, but it's not going to work.
You can try. I mean, the IRS won't process the return without a valid number.
Okay, they just
and they
send it
match
back,
those.
or?
No, they say it doesn't process. If you try to e-file it, it won't accept it.
Right.
And so if you file it paper, they may take it, but when they finally process the return, it'll be kicked back, just as if you hadn't signed the return.
Right. Okay, so somebody's sitting out there in TV land saying, you know what, I just don't feel like filing my taxes this year. The IRS is supposed to file a return for me anyway.
Sometimes IRS will sort of gin up a return for a taxpayer. My experience has been that's not the most favorable tax return for somebody.
Okay.
They may just pick up the income and forget itemized deductions. They may not give you various
Okay.
credits, child credit, other sort of tuition credit. And so it's not required by the IRS to prepare a return. They do have the ability to do so, but it's usually not the most favorable one for a taxpayer.
Okay. How about those home office deductions and being audited?
People sometimes think that if you put in home office, you're going to get audited. But what really happens is a lot more sophisticated than that. And IRS has a system, it's called the DIF system. And what happens is every line item on your tax return is given a sliding scale. Where you live, your income, interrelations between deductions and children. And what happens is you get a score number. It's a big secret. How they do it, no one other than the service people know. But if you reach a certain number, your tax return will be at least looked at by a human being. And if that human being believes that there could be some merit to an audit, you will be audited. But that's not, let me say a couple more things if I may. That's not the only way. One of the greatest sources of good leads for the IRS is if I would like rat you out, right? I think you're referring to a movie where people had lavish lifestyles, no real means of employment. Somebody might say, hey, you know what? I think Mike isn't filing his tax return properly. Right. Insider tips and such like that. Very, very disgruntled ex-spouse might be somebody who would think about those sort of things. So IRS has lots of different sort of leads in on figuring out what returns might be, and they're trying to be efficient too.
Sure.
Right? They're not really looking to spend 2 days auditing somebody who works for a major corporation. They have a W-2, looks pretty clean, but somebody who's self-employed, somebody who has a cash access or access to cash, obviously they're going to have a lot more audit risk, and there's more things that the IRS might want to substantiate.
Okay. Our caller had his question or her question written down, and it kind of goes hand in hand with what we were just talking about. And I'll read you the question and see what you think. It says, my fiance and I, the fiance I live with is a professional student. Can we receive a home office deduction for work done at home? Now, I'm not sure whether that means the student work or...
Read it one more time. That's a little tricky. Give it to me one more time, please.
I could even show it to you since they wrote it down. But it says, the fiance I live with is a professional student. Can we receive a home office deduction for work done at home?
I'll answer it this way.
Okay.
A professional student, that sort of sounds to me like somebody who really doesn't have a job, but might be working on an MBA or a master's, or is just somebody who is constantly going to school. In order to have a valid home office deduction, we need some sort of generation of income.
Okay.
Right? In other words, I couldn't say that I'm a lawyer and I'm at home and I have no clients. Somewhere along the line,
could happen.
Yeah, somewhere along the line, the enterprise can't be a hobby. It needs to be business. You have to have revenue.
Okay.
So
you can't deduct just for your schoolwork.
Now, she might be entitled to some sort of deduction for tuition and expenses that are paid, but this is a fiancé and not a married person, so I don't think that's going to work. And it's sort of a catch-22. Now, if by professional student there was some income being generated, and we might have a home office situation then that would apply. But we need some revenue.
Okay.
To make it work.
Okay. All right. And hopefully that answered somebody's question out there. Let me get another one here. Money made over the internet is tax-free.
That would be great, but it's not true. We touched on that a little earlier.
You're right.
Whether it's barter, whether it's some sort of an exchange system. We mentioned bitcoins. IRS is going to tax. It's actually worldwide. People think that if I go to England or I work in Canada or I somehow am doing some services in the Cayman Islands, that I don't need to file a U.S. tax return. That is totally false. The U.S. tax net is worldwide wherever it's generated.
Mm-hmm.
Now you may qualify for a foreign exclusion depending on how many days and what income you have, but if you're a U.S. citizen, you're going to report back to the U.S. your worldwide income. Now you may get a credit if you paid tax in England or you paid tax in Canada. There can be some pretty complicated calculations, but the U.S. government is looking for a tax return if you're a U.S. citizen. So internet services are in no way excludable.
Okay. Are there income taxes for, well, maybe it's not income tax, sales taxes for internet sales from out of the...
Well, when you look at your Ohio tax return now, you will notice that there is a use tax box that every tax return is supposed to check. And if you have bought something over the internet and you did not pay a sales tax, my understanding, and I am not a use tax expert by any means, but it's my understanding there's a use tax due to Ohio for those sort of transactions.
Okay, all right, but you're kind of on the honor system for that, you think? Or let's say you buy your washer dryer over the internet or something.
I think you owe a use tax to Ohio if there was no taxes assessed on that transaction.
How about those Craigslist things?
I don't know anything about Craigslist.
Oh, okay. Well, maybe that's good.
I live a sheltered life.
Okay. All right, we've got a little less than 10 minutes to go, and you did promise that we'd talk about some of these frauds and scams and stuff.
Yeah.
So let me ask you, talk about some of the phone scams where supposedly IRS agents are calling you up and saying stuff.
It is possible to get a phone call from IRS, but the collection agent from, first of all, we have two general divisions with the Internal Revenue. One is a civil, which is basically we're here to collect the money. The other is the criminal. And the criminal basically is you either haven't filed or you have grossly lied and misrepresented things on your tax return to such a level that we think maybe you need to go to jail. So those hats are totally different. The civil section, which is where most of the taxpayers have contact with the IRS, they have no criminal jurisdiction whatsoever. It would be very similar to paying a credit card or some other consumer type debt.
Okay.
That person is never going to threaten you with jail. It's never going to say you're going to be deported or you're going to somehow lose your license to be a school teacher or something like that. If you have any doubt on the there are a lot of automated phone calls from IRS. If you have any doubt, you should stop immediately, talk to an attorney. There's also revenue officers. A revenue officer, I mean, we have a federal building in Dayton, Ohio. You can review your tax matter with a revenue officer in the federal building at the agency and have a representative. So a civil collection IRS agent is not going to have a threat to you about going to jail. Now, a criminal investigation is a horse of a different color. They're not going to be calling you up on the phone. They will be coming to your business or your home.
Coming to see you?
They will come to see you, and they will identify themselves. My suggestion would be you might want to think about hiring legal counsel.
Right. Okay.
Because they will be thinking about putting you in jail.
All right. We have about 5 minutes. You told us you'd talk about phishing with a PH. Tell us what that is and how that would be
Well,
applying.
I'd like to talk to phishing a little bit. It's so prevalent. I think every week I get something. I think most people on the internet get something. I got a email today from a law firm in town, and I got a notice about 20 minutes later from the bar that it was totally bogus and there was some malware and it could somehow infect your computer.
Yeah.
It happens every day. And so there are impersonators constantly saying that they're IRS, please give any information, Social Security, date of birth, vital account access and stuff. Clearly, we should be pretty aware that that is definitely a real problem area. You should protect your Social Security numbers. Just anything you can check your credit reports, different things. If you think that you have been, your security has been breached, you can call the police, you can call the credit agents, you could freeze your credit. There's a bunch of things you can do. Now I can tell you, I have had clients have their person their theft, they have had their identity theft. For example, I have a fellow, he's a physician, goes to file his tax return, they say it's already been filed. He actually had a refund of a fairly significant refund. That refund is jammed up. Now they're at the fraud section trying to figure out who filed the first return, how this happened, and they're tracing back on this. So we're seeing more and more and more breaches and problems generated by this sort of behavior. So protect your identity is probably number one.
Okay. We have just a couple of minutes left. The filing date for individuals is April 15th.
April
still,
15th,
right?
yes, correct.
And right now we have about a month and a half if you're doing your own. Is it a good idea, do you think, to do it by e-filing or just figuring them out yourself? Or is there any problems with e-filing?
I love e-filing.
Okay.
I love e-filing because just about everything we talked about this evening, did you sign the return? Is the Social Security number right? Did you check a box? Did you forget to say you had health insurance? All of the little nits and gnats are picked up by the e-filing because if return isn't prepared correctly for portability into the e-filing system, you get a little notice. So I'm a huge believer on e-filing. You also get a confirmation back that your return was accepted by IRS. I've had problems with the mail in the past. It took me, I'll be honest with you, I was a little bit of a late believer in the e-filing. Now I am a total believer. I think it's cost effective, it's confidential, it's secure. There are lots of really good reasons to e-file.
Tell our viewers how they can e-file and where they get the forms to fill in and all that kind of stuff.
Well, you know, I don't know. I mean, I'm not out in the market doing that, but I can tell you a tax preparer who has the right software does that. All the taxpayer does is sign a form saying, please e-file for me, and the preparer has the software to get from point A to point B. Does the public library do it, or does the University of Dayton do it, or Wright State, or a church? I can't.
No, I'm asking you, can the individual taxpayer do it themselves?
If they have the software to do it, they need a computer and access to do it. Does TurboTax do that? I believe they do. But I have no practical experience with it. Okay,
all right. Let's ask the floor director. I know we're running out of show here. What have we got left here? I can't see. 1 minute. Well,
I have one thing to say.
Okay,
Mike, even if you have no money to pay your tax, file your tax.
Okay, that was my next question, actually.
That's a good question. The criminal provisions generally are for people who don't file their taxes. If you prepare your return correctly and can't pay, half the penalties go away because the majority of the penalties are failure to file penalties. The failure to pay penalties are smaller than the failure to file. So no matter what, if you can get there, or extend your return until October, gives you more time, but file that tax return. If you can't pay, you'll get a bill. You're outside the criminal system.
Hey, it's been great having you here. This has been a production of You and the Law. We've been talking about taxes tonight, and we've had Chris Cowan, an attorney in town who is one of the best, if not the best, at this. I want to thank the volunteers from behind the scenes who have made the program possible. I want to thank Katie and Lily, who are home watching this. And I've been your producer and host. I am Mike Monta. Thank you for joining us. Watch us again on You and the Law. Good night.